Good morning, traders. Paul here with GammaEdge. It is Friday, June 9th. Let's get started. Pause your players here. I want you to read to the very bottom. It's important to you. It's important to us. Summary for today. Well, we're back to the green side. Short-term market model has flipped back to the bullish side. This is a very short-term model. The trend is for the 0DT and for short swing trades is up. The cumulative tick closed above the previous day close. It's a very simple model, works very well. This generates a new trigger day up. Be aware of that for today. And something we call the railroad track pattern, which is a simple moving average, three moving averages on the CT. It also has confirmed to the long side and is generating a trigger day up. So increase your long exposure in your paper portfolios. That is a good thing to think about today. Now, if we reverse, of course, don't do that, but buy the dips, and that's what this is basically telling us. Long-term market model has flipped to bullish. For those of you who track that, you can increase your progressive long exposure. Of course, do not get out over your ski tips, but for the most part, we are witnessing the buying of the dips and selling of the rips. Transitions, we closed at 42.94. Yesterday we were watching three ranges for overnight parking. 42.95 is a possible overnight parking zone. If you want to see that, go back to yesterday's video and yesterday's handouts, which we released before the open. So there is a way you can get a if-then statement put together and plan accordingly for the day. You don't need us to do that. Of course, we want you to use us for that and our tools for that, but you can learn how to do this, and if you get those strikes right, they can be lucrative, again, in your paper portfolios. Complex transition, 42.75, it's moved up one strike. Negative transition is 42.45, unchanged. That 42.45 is going to be a very common number as you're going to hear today. So want to pay attention to what this range is 42.75 to 42.45. This will be a pretty important range to maintain going forward here. As you slice the different time frames, the transition levels appear or are supportive in there, and that's important. That's really, really important as we go forward. We do think sentiment will start moving to a more protective stance as we drop below 42.50. That's really the line in the sand. Delta exposures should not be added if we drop below 42.50. So when you're looking at buying the pullbacks, there is a limit to the downside that you don't want to do that, and that would be somewhere in the transition zone, getting more dicey below 42.75, and certainly would not add to long positions at 42.50 or below. The SPX combo, which is the AM and the PM settled complex, transition structure is defined, but it's very wide. We've got plus trans at 42.45, there's that number, and minus trans at 41.95. Now, for those of you who follow this, you probably are saying, well, wait, the P trans is at 42.45, whereas above it, N trans is at 42.45. That's correct, and that's because in part we have the AM structure pulling down the PM structure. So we want to be aware of that. There is a mismatch. Typically the rubber band reverts to where there's more money, and more money lies in the AM complex, which next week it expires on Friday morning at the open. Minus GEX has moved up to 4,000 from 3,900. We see this as short-term downside positioning in anticipation of any downward move. It doesn't mean that we're headed towards 4,000. In fact, doesn't mean that at all. Just we have to make progress towards that. Since it's gamma, it's short-dated, and watching short-dated gamma come up means that there is a group of speculators who are protecting their downside, and they're adding really cheap out-of-the-money insurance and dominating that 4,000 strike. Plus GEX remains at 4,300. It's abnormally strong. It's still up over 70,000 contracts in terms of net GEX. And that's a big number. It's very short dated, meaning next week's going to be interesting to see how it rolls off. That all being said, we are still in a out-of-the-money call delta dominant environment above us, which means there's no fear from the bulls, and in the money call delta dominant down below us, which means there's no presence or no dominance by the put speculators. So just be aware of that. The JPM strikes. 43.20 and 43.65 for June and July, respectively, have been flattened. They are no longer players in the game. They exist, but people have pounded long calls on top of those short calls and effectively have neutralized them. This is important because this removes some of the barrier to go north. The SPX landscape view shows that 4350, 4400, and 4500 are clearly in the crosshairs of the market, and if you can pick up some flies, some broken wings up there for relatively cheap, I would certainly think about doing so. For the 0DTE folks, 4280 is P-Trans, 4275 is N-Trans. That's moved up 5 strikes. That's important because that shows you that some, to a certain extent, some in-the-money calls have been neutralized, allowing the puts to come through. It also shows that right below us we have some short-dated puts that have gone in, and that's moved gamma up a little bit. On the downside for the transition. The upper charm strike is 43.20, which is the JPM strike. No coincidence there. People have been targeting that and have pounded that into the ground. So if we take 4,300, watch for a push upward to 43.20 because you're going to see that support, what was out of the money in terms of calls at 4,300, now become in the money, and those flows, especially today and into Monday, Tuesday, are going to be very, very strong. That's going to push us upward, and the dealer response will be to have to buy. We most likely, if we do push above 4,300 today, we most likely will stall above 43.20, but this is absent any targeting. If you see targeting using the value command above 43.20, you know how to play that. Very clear signatures that we've been watching and have been playing to our benefit. The lower charm strike, 42.75 and 42.50. The 42.75 is a little smaller than the 42.50. But nevertheless, as you sweep down, if we lose the 42.75 strike, that will become out of the money in terms of those calls. And what that effectively means, they will start putting downward pressure on the overall market. So we could accelerate down towards 42.50. We don't anticipate going any lower than 42.50. And remember that 42.50 is right up there at the P-Trans or N-Trans levels, depending on what complex you're looking at, which really becomes the line in the sand. So that 42.50 is a critical, did I say critical? Critical component of where you increase your long exposure or not. We are watching 42.70, 75, that little node there. The 42.75, 42.80 is another node. The 43.05, I say ish because it's, it could be on the 4300 to 43.05 or 43.05 to 43.10. Watch that area also. And then if we do break through and push upward, and if we get some targeting today, we think we'll stall at 43.35. Best case, worst case, into Monday's opportunity. Just be aware of that. So look to play opportunistically if we take 4,300 all the way up to 43.35. Running through the charts real quick, this is the PM settled complex. Overall net positive condition, which means that we are net call dominated. Above us, you can see the 43.65 has a little bit of negative gamma, but you can also see the 43.20s here have got positive gamma, still slightly negative delta in the PM complex. But if you go to the combo complex, which we will here shortly, you'll see it's completely been flattened. Pay attention to that 4,300 line. We've got plus GEX at 4,300. We've got also the COI for the PM complex. That's the call open interest dominant level, sitting at 4,300. So a lot of calls there then. If we move above, what is out of the money goes in the money, and charm will flip, and it's a big deal. It's a really, really big deal. Transition, you can see it. I put a box around it, and 4,200 downside is where minus GEX says have no anticipation of getting anywhere near that. We would be out of the market if we drop below that 42.45. At least on the long side. 0DTE, very clean type of transition here. 42.75, 42.80. I put a box around it for you. You can see very tight minus GEX level at 42.70, plus GEX at 4,300. There we go again. Now look at that 43.10 line. That 43.10 line is really important. If we flip above that, you can see how we could push towards that charm strike at 43.20. And if we push, we get any targeting to the upside, you can pretty well see why that 43.35 could be in play. Worth noting that if you just go up and down the call open interest, remember this is 0 DTE, so all of these calls are coming off today. You can see there's a tremendous amount of calls coming off at 4,400. We didn't make it there. There were a lot of speculators out there who were thinking we were going to get up there by Friday. Obviously not. So they probably will do something with this. You know, if they were using GammaEdge tools, they'd probably see that 4360 was probably their upper limit, and they should have targeted that instead. Anyways, enough here. Let's go on to the next one. So 1 DTE, this is looking at Monday. This is our crystal ball view there. Again, look at 4300 and just think through what happens if we go across 4300, how each of these days really presents a huge flip in the charm model as well as the gamma model, right? So you've got to pay attention to that. Again, look at the structure there at that 4305. If you look back here at the 0 DTE, you can see that same nodal, we're sandwiched between on the 0 DTE, the 4300 and 4310. Now look at the 1 DTE, right? We go above 4300 and then we get sandwiched again. So this 4305 zone is something, we see this all the time where we get sandwiched between two dominant gamma levels. So, you know, today's targeting action is going to be really, really important to see how far it pulls us up. If it pulls us up above 4310, we don't think we're coming back towards, or certainly not below 4300, not with the charm support that we should have. But just think through this and watch it carefully. You'll know if you get into a trade close to 4300 and we take off and we pull back and we lose 4300, you'll know to get out. So if you can enter while you're down and near a transition and then push up through 4300, that would be a great outcome. So next week, very clean, everything's repaired. Green deltas all the way up there to 4400. I mean, it's pretty remarkable. Fat transition though, and it's pretty well below us. So this is something to be aware of. The rubber band is stretched. When the rubber band gets stretched, one of two things has to happen. We tend to mean revert back to transition. So either transition's got to come up or price has got to go down. We'll see what happens. Combo complex, notables, I circled them here. So the 4,000, we've moved minus Gex up in the combo complex from 3,900. That's that short-term positioning to the downside. The net gamma notional, 1.8 billion, highest that I think we've measured. This is short-dated calls that are in the structure, and they really are dominating everything. It's pretty important. I also circled in the call open interest. You can see how those JPM strikes are just been pounded into the ground, right? So now instead of at 4320 having minus 39,000 short calls, they've effectively been neutralized across all expiries. Again, watch where transition is below us. Rubber band stretched. Everything I just said for next week applies here. So we could see some weakness. It's an interesting outcome. Last picture here is the landscape view. Kind of gives us a pretty broad view. Puts it all in one concept view, and you can see 4,300 still incredibly strong. 4,400 is growing dramatically. This is where a lot of the short dated calls are going in. 45 also. We are just below that 4,300 line. You can see we're pretty far from transition. You can see why 4,250 is a big number. If we lose that, we fall into this ill-defined transition down to 4,200, and then 4,195 really becomes where the lights out, bears are in control, and down we go. So that's it for today. Have any questions, comments, come on into the GammaEdge.us site. In the upper right-hand corner, there's a pricing tab. Click on that, fill out the blanks, come on in. It's a 14-day free trial, no risk to you. Bottom line, great group of traders. We're in voice. We do a lot of education on this stuff. We call out our trades that we're making as mods and admins, what we're seeing. We really want you to learn how to apply this stuff. It's not just smoke and mirrors like some of the folks that are out on Twitter and YouTube. Speaking of Twitter, follow us, please. GammaEdges with an S. And then on YouTube here, of course, two things. If you like today's commentary, please give me a thumbs up. It gives me immediate feedback that I'm providing content that you find useful. And two, of course, follow us, because when you do, you get notified of the next posting. So with that, I will bid you farewell. Make it a great Friday, a great weekend, and hope to see you in the Discord. Thanks.